Hi, this is Kyle Ferguson with OptionSherpa.com, and today I want to talk about Apple because it's such a hot topic in the news. It typically does that from time to time. We own Apple in the enhanced dividend portfolio, so I wanted to just kind of show you what it did to us and kind of how I'm looking at it going forward. So, a few days ago, on the close of the market, Apple came out and they announced three big things that were pretty big for the stock. And what they did is they finally rewarded shareholders for being patient all this time. It's been a few years since Apple hit its all-time high of $705. They haven't came out with any new products. They've came out with better versions of their current products, but they haven't came out with any new products. Guys that own a lot of it, like Carl Icahn and other activists, want them to use that $150 billion they have in cash sitting there. They want them to either create new products or reward shareholders. So Tim Cook came out on the conference call and said that they were going to finally reward shareholders. They were going to increase their share buybacks, which means they are going to, I think they're going to buy $30 billion worth of stock back. They're going to be raising quarterly dividends by about 8% each quarter. And then also they're going to do a 7-to-1 stock split. So what the 7-to-1 stock split, you guys can kind of think about, is that doesn't provide any value to you. We own Apple in our portfolios, and that doesn't make it a better investment. But what it does do is it allows a lot more people to get into the stock. So people, Apple's, there's a following. People want to own Apple. It's tough to go own Apple at $567. That's a lot of money. $567 per share. A lot of people can only buy a few shares of Apple. So what they do is when they do a stock split like that, it lets a lot more of the public into the stock, which is always better for current investors because it provides a lot of liquidity. It lets you it just allows more people to participate in Apple, which is always better for the current shareholders. So this is good news. We've been in Apple because it's increased its dividend over time, and it's become a good dividend stock. For the most part, the stocks in our portfolios, especially the dividend ones, don't move like this too much. But there is a case with stocks like Apple where they will. Now, I did a screencast a few months ago on January when Apple dropped 8% on its earnings announcement, and I kind of used an example of our covered call strategy. And when it dropped 8%, we cut a good quarter or 0.5% of those losses out because we had a really nice and tight covered calls on it. Now this time it jumped 8%. Yesterday on the open it was up 8% for where it closed the previous day. We did have covered calls on it, so that did cap our upside, but not horrible. I mean, yeah, we didn't participate in the entire 8%, but because we do this every single week and we're disciplined about doing it, I'll kind of walk you through it. This is where we bought Apple back in January. Now, a lot of the reason we put this on is we were starting the Option Sherpa portfolios. This isn't a bad area. We had some little support here, but it wasn't a bad purchase area. No one knew what Apple was going to do over the next 3 months. And as you can see, it's been crazy over the last 3 months. I mean, it's just been up, down. There's been a lot of volatility. A lot of stocks in the market look like this right now. And Jeff and I did a podcast a few weeks ago on this sideways market and how you can profit on it. And that's on our Income Plus podcast. And we just kind of talked about what can you do when the stocks in your portfolio are doing this. I mean, do you just sit back and wait and see if these things are going to break out to the upside or crash to the downside? No, there's actually some pretty good strategies. And for you Option Sherpa subscribers, you're doing them right now. And they're working. So with Apple, we've made now, because of this big move yesterday, now we're up about 5-6% on the stock, 5.82 to be exact. But we've also taken in almost 3% on options. So I should call this screencast, the 8% screencast, because we protected ourselves on this 8% drop here. We also participated in this 8% increase right here. And the combination of Apple doing this over the last 3-4 months, we've made 8, almost 9% on our investment between the stock and the covered calls that we've been writing. So we've made about 3% on the covered calls in 4 months. That if we can keep doing that, that's that'd be a plus 20 return. So that's our goal. Each and every week we write these covered calls. This is why we do it, to help protect us against these moves like this, these down moves like this. But when the big moves do come, like Apple did yesterday, we also participate in it. Yes, we will cap our upside, but we do participate in it. And over time, if we do this consistently and you're always writing calls each and every week, like we talk about, you will be rewarded, and where most people will either lose money or not make any money at all. So if we back it up a little bit, kind of going forward, it's no coincidence that these things stop where they stop. Why not gap 12%? Why not gap 15%? Why do these things do what they do? And if you look back right here in time, right before it hit its 705 peak, there's a lot of chop going around in here. So what this does is this creates a huge resistance level, not just for, this time period, but for years down the road. You see it bounced off here again, and it bounced off here again. So this actually is the third attempt recently in the last year that it's going to try and get through this level that was created way back in here. So I'm going to see what it does on the open. I don't really care too much about the day-to-day action, but I would love if Apple busts through this over the next few weeks, and instead of being resistance like it is right now, it becomes support. Then we might be a little more free with our cover calls and let this thing run a little bit. So it'll just kind of depend how it acts here over the next few weeks. But bottom line, good news for us in the Option Sherpa portfolios that we own Apple. Great call by Jeff. Looking forward to kind of see what it does as they lower the stock price, see how many people jump in. It could be really good for Apple. And if they start to come out with some new products in the fall like they're supposed to, that could also be really good. So we're going to keep our eye on it. But overall, great news for one of the stocks in our portfolio. And if you guys have any questions on how I'm playing this, how I'm writing the calls, just go to optionsherpa.com or alpineadvisor.info. Send us an email. I'll answer it. I'll tell you how I'm doing it. And go if you're seeing this and you're not a part of it. Join the Option Sherpa for a while. See how you like it. We're doing really good this month, and we're just disciplined. Every week we write options on these quality stocks. So that's it. Have a great weekend. Talk to you later.